For more on the effect of Japan's earthquake on the markets, let's bring in Nicholas Colas, Chief Market Strategist at ConvergEx Group. He has a note out today outlining the economic factors to watch for. Nick, welcome back to Bottom Line. Always good to have you on. Wish it was under much better circumstances.
Absolutely.
I was thinking today it's almost kind of uncomfortable to be talking about the market aspects of this, given that there's such a huge human toll, but they do go hand in hand because we're talking about Japan's future here and how they might be able to take care of their people. What are the relative costs involved here? What are we talking about?
Well, it's so hard to know because we're still working under really imperfect information. The most commonly used data point is the earthquake back in '95 in Kobe, Japan, which cost order of magnitude $120 to $150 billion in total repairs, which obviously took several years to accomplish.
The disaster, you say it's going to have a long-term impact on industrial production. Why?
That's right. A couple of different reasons. First and foremost, Japan works on a very tight inventory system called just-in-time. And so the entire production system in Japan is screwed together very tightly and is very fault intolerant. They're going to find it takes a lot longer to come back up to speed after a big hit like this, because every piece of the equation, from energy supplies to inventory to final production, has to work really very closely in concert.
We are learning that the Bank of Japan is now stepping in to fill the breach. Are they moving soon enough, and are they doing enough?
So far, it looks like they're doing all they can, and they're doing it very aggressively, which is good to see. You know, there's a very well-established central bank playbook for disasters, and it says get out in front of the curve and provide liquidity as quickly as possible. So if there are regional banks, for example, from this area that need support, they get it right away, and the rest of the system can serve to equalize itself. You know, the downside is stocks obviously take a big hit because there's a lot of worry that this will take a long time to recover from, and the economy will recover only sluggishly.
And as our economics editor, Michael McKee, mentioned before the commercial break, the wild card in all of this is the yen, isn't it?
Yes, it is. And ironically, periods of crisis like this see the yen appreciate because most of the money that Japanese companies hold is held offshore, and they're repatriated to begin to pay for the repairs and pay insurance claims. So ironically, you have to keep the yen from strengthening dramatically, which would hurt exporters. What
about Japan's holding of U.S. Treasuries? How's that affected?
Yep. Japan owns about $880 billion of U.S. Treasuries, about 10% of the publicly available float. And the worry would be that they would have to sell some of those bonds in order to pay for this reconstruction. So far, that seems to be not the first area of concern, but I think it's a longer area of concern, particularly if the costs rise more than we expect.
Nicholas, we've been hearing some very disturbing reports coming out of what was going on at that Fukushima nuclear plant. What does this mean for nuclear policy around the world going forward? We also saw Germany today saying there would be a moratorium on this. What does this mean?
Yeah, it's a great point, and I think the most important long-lasting point to this crisis that we know of so far. To put the Kobe earthquake back into a little bit of format and perspective, oil prices were $16 or $17 a barrel back in 1995. Now we're looking at $100 a barrel. Energy policy is a much more important part of the global equation, and how different countries allocate and generate energy is an important part. Nuclear now seems to be, at least for the moment, really off the table in most countries, thinking about how do you supply electricity for the next 50, 100 years.
Nicholas, we have 20 seconds left. Is there going to be a domino effect? How's this going to impact the U.S. economic recovery?
It's so hard to know at this moment. I think the most important thing to keep in mind is watch capital markets over the next couple of days, because what the Federal Reserve and what the U.S. economy has struggled so hard to rebuild on its own since the financial crisis, the tragedy in Japan could really serve to derail if confidence begins to drop again.
All right, Nicholas Colas, Chief Market Strategist, ConvergEx. Always good to have you on, Nicholas. Thanks so much. Appreciate it.